Big tech is included. Well, Gil Luria, Managing Director at DA Davidson, joins me now for more. Gil, it's great to have you on the show this morning. We are talking about so many different sectors of this market and, of course, what a Trump administration means for them. I see a technology name set to rise at the open today. What is tech like under Trump?
Well, by and large, the benefits that you've been talking about are benefits to the technology companies as well. So for the taxpayers, the tax rates will either stay low or go lower. In terms of the regulatory environment, it's been very restrictive on the ability to conduct mergers and acquisitions. That should loosen up. That should have a very big impact up and down the market cap scale. But then finally, there's some subtlety to the conversation about the largest technology companies because both President-elect Trump and Vice President-elect Vance have made some strong statements around the biggest technology companies. There's been specific disputes with some of them, and we're going to have to see how they are treated once this administration takes office.
So you cover the stock performance, the fundamentals of these businesses. Gil, do the fundamentals of any of these technology companies in your purview change?
To the extent taxes go lower, that's going to help a lot. Again, the ability to make mergers is something these companies have been almost locked out of for the last several years. Let's not forget, Amazon couldn't even buy iRobot for $1 billion. Amazon's a $2 trillion company, and that was blocked. And underneath that, Adobe's acquisition of Figma was blocked. Adobe's not even a mega cap. And so the whole ecosystem has been stuck. That trickles all the way down to venture. So if we get back into a world where companies can buy other companies again, that will drive more growth, it'll drive consolidation, it'll drive more capital markets activity, which will trickle all the way up and all the way down in terms of more economic activity.
It's interesting, Gil. We talk so much about the most valuable companies out there. All of them technology names. They drive the overall direction of the S&P 500. I think collectively that sector makes up 25%. That is its weight in that market cap weighted index. It sounds like a looser regulatory environment, specifically when it comes to deals and the VC market, would be beneficial for this tech space going ahead. Do you expect over time that it will continue to gain share within the broader market?
Yes, for the simple reason that almost all productivity comes from software. Even productivity in other sectors comes from better and better software. And let's not forget, we're living in an era of huge change in the productivity based on new AI-driven software. So generative AI is still in the experimentation stage, but as it gets deployed and becomes part of other software products, it's going to drive productivity not just in the tech sector, but beyond. The gains will mostly accrue to the tech sector. And as we've seen so far, mostly to just the handful of companies, the Mag 6 really, that get most of those gains because AI specifically lends itself to the largest scale in order to make progress. So yeah, we expect the weight of technology to increase, and specifically the weight of the Mag 6 to possibly increase as well within that.
I want to get your take on semiconductors. I know NVIDIA is a company that you follow closely. Of course, it is its own unique subsector within the broader tech landscape. Can semiconductors find ways to become more competitive and more efficient in this process?
So there's a huge boom in data center construction right now, which is driving mostly NVIDIA. And again, that's going to continue at least in the short term because that is how those other companies, Microsoft, Amazon, Google, Meta, are creating all these AI tools is in NVIDIA populated data centers. So that boom will continue. Broadly speaking, the other thing to look at, though, is a tariff regime. Any tariff regime, any disruption to the global flow of goods could be an issue starting with NVIDIA and then flowing downstream to all these other companies because our supply chain for semiconductors is very global. The parts, the commodities come from a lot of different places. They're constructed, a lot of them in Taiwan, which then gets distributed from there. Any disruption to that global supply infrastructure based on tariffs could disrupt all of these companies, starting with the companies such as NVIDIA.
Optics-wise, how do you expect the chief executives of these large technology companies to approach the Trump administration?
Well, I think we had 4 years of tuition around that question. And I think the CEOs paid their tuition, learned their lessons. And if you notice, they all tweeted or put on X congratulatory remarks to the president-elect. This often just gets down to a personal relationship and these CEOs being respectful and positive towards the president. Let's not forget he's had run-ins. He had a run-in with Facebook at the time when they deplatformed him. He had a run-in with what was then Twitter, which deplatformed him until Elon Musk came back and brought him back in. So he has some animosity there. There have been accusations that Google's searches have been skewed against him. So these CEOs are going to want to be positive, address those concerns, and make sure they're on the same page with the president himself before they can address other regulatory concerns. And I believe they all understand that and are proceeding that way.
Gil Luria, thank you so much for joining, of course, Managing Director at D.A. Davidson.
Thank you.